Good morning, traders and investors. Todd Gordon here with the kicking off the Wednesday live stream. I'm the founder of Trading Analysis, now working with Ascent Wealth Partners on the management side. So kind of running a dual role, but still doing the favorite trading show of the week. Welcome, guys. Glad you joined us, and lots to talk about, obviously, in the highly volatile market that we have here. So obviously there's a lot to talk about. We'll jump right in. Let's bring the team in as always. Trading Analysis Team. Alex, Terry, Bennett. Good morning, guys. How are you this morning?
Good morning, Todd.
Yeah, good morning, Todd.
Well done. Hey, guys. How's it going?
Good. How are you this morning?
I'm good. I'm good, man. Boy, busy couple days. We're finally starting to see the coronavirus spread really start to hit, and it was sort of a gradual kind of sell. It means a lot. So, if you look at it in a percent change, impact of a move like 1,000-point down move is less severe. So, yes, it's interesting. I'm happy with the way Trading Analysis has handled it. We do have some TLT hedges on the Trading Analysis side at work. The team had a nice short position in Salesforce. I'm sure Bennett's going to talk about that. So yeah, there's a lot going on. We can kind of start it off here in terms of I'm going to leave the specific index analysis to the team because they've been diligently working on that. I did put the TLT trade on to hedge my own personal portfolio. I've not done that on the wealth management side, and I can tell you why, because we've had a lot of customers from Trade Analysis convert over to clients at Ascent Wealth Partners, and luckily the money transfer coming from whatever institution or custodian they're at takes some time. So so we have been receiving capital coming in, and I've been very, very delicately starting to deploy that capital. We're doing it, in fact, on the way down. So, that's been kind of fun. And, as I said, I don't want to take too much time. This is a trading show. This is an investment show, but the transition continues to be pretty amazing. Really a different world than what I've been doing on the trade analysis side. And again, I just want to underline what we're doing here at Trading Analysis, and this has been the consistent message since I've been doing this short-term trading education advisory kind of business. Don't be trading with any more than 10 to 15% of your investable capital with our option. It's been pretty awesome. The other thing I'll point at the indexes. I'm going to leave it to the team because they've been diligently and excellently, and it's so fulfilling to see the team that you've built start to do better work than you could do. It's very fulfilling, and I am completely good with it. The only thing that I will point you towards is the bond market. I think the fixed income has had a bid since October of 2018. So I think that is something that we certainly have to acknowledge. And if I were just to take instrument overlay and just throw SPX over it, come on, baby, you can do it. Oh, I am so out of practice, Terry. Here we go. You're going to see that there's been a bid and a positive correlation of SPX and TLT since the low in 2018. This recent push in the white, which is TLT, has only been in response to the sell-off that we've seen in SPX. But keep in mind, it's been lower rates and an accommodative Fed, which has been exacerbated by coronavirus, which is now spreading outside of Asia into Europe and the Middle East. It's been chronically low interest rates, and I just think that this coronavirus, which I guess the perception is that it should be contained in the middle of the summer, or not contained. I think the proper word is slowed. It just leaves the Fed further on hold, which I think there is just a constant perpetual bid into bonds for a couple demographic reasons. I think people are living longer, going back to the investment side. When people are 60, 65, people are living longer, and we're having to readjust our models on the wealth management side. People are living into their 80s and 90s now. That's a long time to continue to buy fixed income in traditional models. So you have to have a good 30-40% allocation. So people are living longer. I think deflation continues to be a big reason why bonds push higher, because technological job displacement is unbelievable. My wife was telling me Amazon has the first grocery shopping store that is completely cashierless. You walk around the grocery store, you take products off the shelf, the app that you're carrying knows the product you've grabbed. You don't even have to check out on the way out. I mean, just technological job displacement continues, and that is a deflationary trend spurred by technological innovation that is keeping interest rates low. So I think my point is bonds go higher either way. Stocks higher, stocks lower, and that's why I think it was a good trade. So I did the trade live on CNBC last week. Did the 145, 150 call spread, and keep in mind, guys, I'm not telling you I sidestepped some serious loss in my portfolio. I got hammered over the last 4 days, and I'm just being completely honest. I've lost the 150s, I think. But again, we talked about potentially a continued move up in gold as central banks around the world, I think, are going to be easy for a long period of time. You've got risk aversion from coronavirus. I mean, I just think gold and bonds continue to push up. Where equities go, I'm going to leave that to these guys. So that's my opening thoughts. Again, if you were looking for anything on the wealth management side, be sure to find us at Ascent Wealth Partners. That is my RIA firm that I'm working with and enjoying very much. Email if you do want help there is I'll just give it to you and then send it back to the team. So it's Todd G at AscentWP.com. Okay, just let me know if you need any help with that. But I'm still watching what the team's doing here at Trading Analysis. They're doing a wonderful job, and they are running stronger than ever. As I've stepped aside, kind of like if Trading Analysis was a public company and this sort of transition happened, the CEO leaves and the stock goes up 15%. That's kind of what's happening here. So, Bennett, take it over, please.
Appreciate it, Todd. And I do apologize to our viewers. It looks like we're having some intermittent issues with the YouTube servers, so there might be a few cutouts here and there. Trying to resolve that here in the background, but I think we should be good now. So let's go ahead and move over, take a quick look at what's happening in the markets, and just kind of discuss this overall correction that we've seen off the highs. So let me go ahead and bring over my Motive Wave window. 1 second here, guys. All right. So we're taking a look at our S&P 500 red count, and this particular count we've been bringing to you guys for a couple of weeks now, and this count was calling for a correction down to around 3,200 to 3,180. Equality of the magnitude of correction in wave 2 would have come in at 3,204, and your often typical 38.2% retracement of the overall wave 3 advance came in at 3,178. Now, that said, this market is looking pretty directional and impulsive to the downside, which in my opinion leaves two distinct possibilities from an Elliott Wave standpoint. Could this still be a wave 4? Maybe, but it's looking very unlikely. Given the 5-wave structure of this decline, if this were to be A of some sort of wave 4 correction, and given the guideline of alternation, Terry pointed this out to me that we have a sideways correction here in the form of a complex. So perhaps a directional correction in wave 4 would make sense given that guideline of alternation. But if that were the case, and this were to be A of the wave 4, a typical 50 or 61% retracement of this decline, then combined with even a 61% projection or extension of this A wave, let alone equality of CNA, would take us so far below typical 4th wave support that it's becoming kind of questionable as to if this is actually a 4th wave. We saw the correction coming. We took advantage of it with a short position in Salesforce, which we'll take a look at here in just a second. But let's talk about the... go ahead.
That was a beautiful chart, Bennett. Don't skip. Sorry to interrupt. That was a beautiful setup in CRM. Please don't skip over that.
Yeah, absolutely. I'm definitely going to cover that. And then, so the two distinct possibilities that I see from an Elliott Wave standpoint are this. either we've been right for the past year and a half, and this is some sort of ongoing fourth wave triangle, which when looking at the S&P still kind of remains a possibility. Looking at the NASDAQ, the move higher is just so significant that it kind of becomes questionable. It's not out of the realm of possibility. It still fits within the rules and guidelines of the wave theory and wave principle. So that leaves the other alternate, which is this is simply a wave 2 correction. And this goes back to the fourth wave complex, which came to completion in the form of a Y wave triangle. And this is a count that Todd introduced to us last year when looking at Apple, going, guys, what if this is a Y wave triangle? It's very unusual, but it's completely valid, and it actually answers a lot of questions and explains a lot of kind of what's been going on in this market. So he introduced it in Apple. We looked at it in the NASDAQ. That same count is actually applicable in the S&P. And if we take this back to the January 2018 highs, we could look at this as a three-wave structure off the top, a three-wave move back. This would actually be a complex. I'm not sure why that got switched because this is clearly a three-wave move. But regardless, we have a three-wave structure here. This can actually be counted as a three-wave move, and then we have triangulation in Y. That would then give us a kind of post-consolidation divergence here with a five-wave structure where we have this extended wave 1, extended or shorter wave 3, and then an even shorter fifth wave. And I was looking at this in our member video update last night, taking a look at momentum and volume within this area, and we actually had a peak in momentum and volume within this third of a third. So that kind of verifies and is in line with the idea that that was a third of a third position. This correction off the highs could very well be viewed as a wave 2. And what's interesting here is if I get you over to the weekly chart and we kind of just take a look at this expanding trend line, which started 2018 high, so we can source it off the 2018 high in January, kind of retested in September. In my opinion, it became kind of important here in July, where we retested it again, found resistance. Notice when we broke beyond it, we back tested it, found support, and continued higher. So at this point, taking into consideration this decline, and we can count a completed five-wave move off the highs. Could it become more fractal and we end up sliding to the daily 50 moving average today? It's definitely not out of the realm of possibilities, or I should say the daily 200. So my take on this market is if I get you off the daily down to a 1 hour chart, there's a couple of ways that we can count the move off the highs. You could look at this as kind of a large fourth of wave 1. If you were to put wave 1 here, you do have a nice 61% retracement, but that leaves you with a three-wave structure. The only way you can make that a five-wave impulse is if you go down to like a 1 or a 5 minute, and even then you have such a short fourth wave compared to 2 that it becomes a little improbable. So regardless, we still have a five-wave structure, a tiny three-wave retracement, another extended five-wave move here with a nice acceleration gap, and then we have this fifth wave which kind of ran into a little bit of support, at least in the cash session. We did break the low overnight in futures, but in the cash session we found a little support there. The way I'm looking to trade this is, even if this is not A and B, if this is perhaps 1 and 2 of the start of a bear market, which I really don't see at this point, I think the highest probability trade here is to await some sort of three-wave relief rally, and that's when I'm going to be looking to enter a position to take advantage of a C-wave decline. And in fact, what's interesting here is if we were to take this theoretical completion of this five-wave decline, project a 61% theoretical retracement in B, and then project equality of C compared to A, that would take us right around typical wave 2 support, which is a 61% retracement. So do I think this is the start of an all-out breakdown? I really don't see that as of yet. Obviously, we don't know the bottom line impacts as to the coronavirus, how it's going to impact supply chains, bottom line earnings, global GDP. I think a lot of that is yet to be determined. And really, I feel the market was looking for an excuse to kind of take profits. I think this is one of those instances in which we saw the fundamentals kind of trail, or fundamental catalysts of sorts trail the technicals. We were looking for completion of a move and some sort of a corrective move, whether that was the wave 4 or a wave 2. So I'm personally looking at this as a wave 2. And if I take you off the S&P, bring you over to the NASDAQ, we have a very similar story unfolding here in that we have this Y wave triangulation followed by a nice 5-wave move. Wave 5 came to completion at the upper end of our Elliott trend channel offered from 2 and 4, and we're working a 5-wave move off the highs, looking for a relief rally. That's the relief rally that I'm looking to short with the team. We can actually apply this same count to the SMH. So in the SMH last week, Todd, we were noting this kind of 3-wave structure to the highs was giving us the idea that we were going to see an impulsive at least C-wave decline, and that we got. But as a matter of fact, we can apply the same Y-wave triangle count here and still get a completed 5-wave move. We have an extended wave 1. All waves here break down into nice 5-wave subdivisions, even a third of a third. So I think it's very appropriate. And at this point, kind of a similar story here. We're looking for this 5-wave decline to meet support, give us a 3-wave retracement, and that's what I'm going to be looking to short. So it's kind of where I stand on the markets until we see evidence to suggest that this move is going to be even more substantial. I think it's kind of wise to just kind of take a step back and look for opportunities in this market as they present themselves. And, you know, could this ultimately end up resolving into our ongoing 4th wave triangle? Sure. And I'd love to trade it. But at this point, I don't necessarily see it. What are your thoughts when looking at these charts, Todd?
Well, again, you're very plugged in, and I'm following along intently, and I agree. I think there is going to be. I think that's again. We're working on a little bit of a lag right now, so that's a little challenging in this end. I don't know if it's vMix or it's YouTube, but I do think this is a wave 2. And if I just take the screen back,
yeah, I'd be happy to pass it your way. Just share. 1 second. Here we go.
Okay. You know, just taking the Elliott Wave hat off for a second, guys. Just looking at, you know, what we're doing in terms of, let's call it cafeteria technicals, just the basic moving averages, some Bollinger Bands, you know, just what everyone, you know, whoever picked up a technical analysis book would be looking at. You know, I just can't dismiss how important the 200-day moving average has been, and we are not. I think it's safe to say for everyone on the trading analysis staff here, I don't think we are big moving average fans. I mean, you mentioned it casually, Bennett, but you know, this rally in the last year and a half has been very much respectful of the 200 EMA. And, you know, it's funny, every platform that I check out has a different calculation of the moving average, which is pretty surprising because it's pretty basic. But, you know, it seems to be that we've tested the 200 back here in March 2019, June. Here we are into August. 3 tests, 4th test in October. There we go up into 2020. Certainly a lot of separation from the 200 EMA, and we're just coming back. So in the event of a wave 2, Bennett, what's our
like
lower
weekly
SPX if this is wave? You what, like Alex?
I like weekly.
Wait, Alex, would you call me? Okay, I'll go to weekly. I'll go.
No, I like weekly.
So, what are you talking about, dude?
He's liking the weekly moving
weekly.
We were having a discussion on it prior.
Okay, all right, I got it. I'll get there, I promise. So, so Bennett, what's the lower for wave 2 if we are in an SPX wave 2 pullback, even if this is A of 2? What's the lower support level that you identified? At what point are you concerned with that count?
So the 618 is at 3050. Equality of what would be CNA is right around 3000. But if I see a break under the 786, that's when I'm really going to start to be concerned. But just quickly to your point on the moving averages, the reason that I've been reviewing them in this kind of market environment is I think that so many retail investors and even institutional investors in these sort of market environments are kind of utilizing and looking and paying attention to those levels. So that's kind of why I think they're can be used to our favor. And just to answer your question, the 786 is at
Okay.
2963.
2963. So I mean that would be 63 would be right here in the SPX. That's a little bit more of an overshoot that we've seen since the 2019 decline. And even back into 18, 200-day was relevant. I mean this mess at the end of 18 into 19, once we broke the 200, we messed around for a while, and then we took that final C wave dive into the end of December of 18 heading into 19. So again, I'm surprised the last couple of years how relevant the 200 EMA, and the calculation of EMA and SMA is not that different, but I'm surprised how relevant it is. So, that kind of ties in well with what Bennett said. If we get to the 786, I would be very concerned and probably dismiss this of any validity. But if it's a 50% or 61% retracement of wave 2, this is the buy zone, and it's not a lot of capital. And I am sitting on capital in my accounts. I'm not fully invested, but also with our new investors, and I will be certainly watching how the market responds here. Alex, weekly right now, okay? Here's where it gets scary, okay? So this is the weekly, just again, the simple moving averages, the 50 EMAs in green. This yellow, I think, is the 89. Is that right? That's the 89. I just threw that in there. And then this is the 200 week. So, yeah.
Yeah, you can squeeze the chart even more, and it's a perfect hold everywhere from beginning almost.
Okay. So let me do this. Let me go. Alex, are you cutting out, or what's going on, man?
I'm just saying it fits nice with the possible triangle. YouTube is actually giving us a problem.
Okay. Yeah, I know. It's yeah. I don't know if it's YouTube or the streaming software. But to Alex's point, I mean, this was a pretty good overshoot in 2011 of actually it was clustering of the 50, 89, and 200. We dropped down to 1082. Looks like the moving averages were clustered around 1200. But then to Alex's point, we felt the 200 week perfectly twice at the end of 2018, and we're certainly removed from it. So, that's all the way down at 2670 and the 200. The 50, 89, the lower Bollinger Band, just around that 3,000 mark. These guys correspond pretty well with the dailies. So again, it's 3050 to 2950, 3050 to 2950. So you have a 100-point SPX range. 3050 is going to be the upper zone, and then 2950 is down here. So I really think for me, 3080 and the 200-day EMA is key, and then the 50 and 89 down into the 3060, and I really wouldn't want to see it get any lower. So the next 100 points I think is really, really important from a moving average, simple technicals, tying back to what Bennett said, and then if not, I think Alex is right that we might have another. Boy, that's 300 points to go there in the SPX. So. Who wants it next?
Let me answer a quick question that we had in the YouTube, and then I'm going to pass it over to Terry. Are you good with sector rotation? Did Optima get sorted? We've lost his audio. Okay, I'm going to go it real quick, and then we'll jump over to some futures, and I'd like to see what Alex has to say in the Forex side of things.
I'll text him to see if he's still in.
All right, so I just wanted to discuss this comment we had really quickly. Somebody was saying, well, we can either have a wave 2, a triangle, or a market meltdown. Given the highest degree count, I don't see a market meltdown. I see a triangle as possible, but more importantly, we can utilize some of these levels that we're looking at and some of these projections to determine if in fact this is a wave 2 or if this is a triangle. So if we were to just take the idea that we have an extended third wave here on the weekly, and in fact wave 3 was near a spot on 1618, absolutely love it. More often than not, distance traveled in wave 5 is equal to wave 1. if we were to take that in consideration, we're looking at, beyond 4,000 in the S&P. A 618 of waves 5 and 1 is at 4,200, 41.48. So do I think this is an all-out bear market breakdown? Absolutely not. Could some sort of catalyst develop? Sure, anything's possible. The future is unwritten. And could it be a triangle? Yeah, but let me show you what I'm looking for to determine if it is a triangle or if in fact this is a wave 2. So let me get you off the daily real quick. This won't take but just a second. So if we look to a 618 retracement or even a 50%, any sort of a 3-wave retracement off of this decline. Once that comes to completion, we start to see indicators roll over in the market start this C wave. More often than not, we're looking for equality of CNA. If this starts pushing beyond equality, beyond this 786 level, and we see, like, for instance, a 1618 extension of A, then absolutely I'll be deferring to the idea that this is an initial 5-wave move as part of that C wave of the triangle. So I think the next 3 to 4 trading weeks will give us a really good indication as to where the markets are going. I'm looking at it as a wave 2. I think it works great in the SMH, in the NASDAQ, and the S&P. So I just kind of wanted to address those 3 possibilities before moving on. And then real quick, just to give you guys the breakdown in Salesforce. So we've actually been tracking Salesforce for quite some time, going back to the triangle completion. Todd put a position on in the portfolio coming out of the triangle, have a nice little 5-wave move, 61% retracement here in wave 2. Then we have another 1-2. We have a nice extended third. This is the ending diagonal pattern that we were tracking. We took the position right actually at the top of that ending diagonal, picked it up for around 113, ended up selling it for 250 ahead of earnings. Quick, 3-4 day trade on that, coming out of a beautiful, beautiful pattern. And what's great is we had this ending diagonal, and as the ending diagonal came to completion and we took the position, the markets started to roll over. So it was really well timed and a lot of fun on that one. So
just beautiful. Again, wave 4, excuse me, clearly a wave 4 triangle, which indicates you have one more trend push. Within that blue 4, you move up as he's timing blue 5. Blue 5 is not complete. Typically, a diagonal happens when a wave has gone too far, too fast, which by definition is usually the 3rd wave. So if a diagonal is to form, the most likely location would be wave 5 within wave 3. So, I mean, it was just everything came together on that trade, and I thought it was really well done, Bennett.
Thank you, Todd. Appreciate it.
It's hard to catch any diagonals. It really is.
It is, yeah. And considering they can develop beyond what you originally anticipate. All right, Alex, I'm going to go ahead and make you presenter, sir. I'm going to pass it your direction and see if you can bring us up to speed in the Forex world. Give us some insight. What are you seeing?
Hi, guys. Let me just... Okay, so let me just make a few overall of how we in trading analysis was actually announcing, and that was not so difficult from the Elliott Wave perspective. This is the 10-year yield, and if you go a few webinars, maybe a month or so back, you will see that we were kind of looking for a strong push down in yields, which is actually happening. So we have been down in 1, up in 2, a very nice 5-wave subdivision in 3, pullback in 4, and now we are still not done in a move down in yields. So the things can even become a bit more on the downside. Now the big question comes: what is going to happen at this point if the yield starts to move higher? Okay, so this is one of the big question mark, but I don't think it's going to happen soon, because our Fed actually signaling that the Fed even might cut, in my opinion, in things starts to be exuberant with the S&P even in March. So this is greatly increasing day by day, and I think Fed is going to definitely cut either once or twice in the next months. If you go in April, 49, already 50% is market is calculating 25 basis points cut in rates. So I'm looking to be, when this a little bit of panic passes, I want to sell dollar with some pairs, and I want to actually on the long, probably in Aussie, comparing that with the copper chart that I already told you, and I'm looking also euro dollar because different. We have reached our target actually. I know we have been talking about this Macron gap for a year now, and if you see, guys, we covered the gap. We came exactly to the gap, and we are bouncing back. It's still a feeble bounce, but for now, with the current overall market view, I still think we're gonna get some X wave, and I think we're gonna go down up in ABC in euro, based on the presumption that the Fed is going to go and cut rates to help the markets and the economy to digest this coronavirus economical kind of outlook in the next 6 to 10 months. Okay. So what I wanted to show you else is something which I was looking on this Aussie dollar, which is falling actually from 2011. And I said to our members on the Forex members webinar that the next push up in inflation, I don't think it's going to be a widespread demand from the world. I think it's going to be a lower dollar move. And we were discussing that a week ago. And I think if we look this Aussie dollar and if we look some other things, I don't think there is a much room left. And I think we're going to see an abrupt push on the upside on the market, when the market is going to short the dollar on the anticipation of the Fed rate cut. So I'm looking few pairs, and I'm expecting when the copper chart that we are trading is going to reach some levels we are watching here, which I can show you. Okay. This is kind of my macro outlook that I'm looking now. Sorry. Okay, so this is my copper outlook. I don't think there is much left in the tank on the downside. So 5 waves up, 3 waves down, 3 waves up, or a triangle. And I think there is a little bit more downside. When I see copper at these levels, and if I see it, I'm going to start pushing on the long side on commodity currencies in anticipation of the possible Fed rate cut, and a move up is based on dollar, not on a specific global demand, which is a kind of different demand, and it can be shortly lived as well next few months. So just be aware of that. And I want to mirror the balance sheet of the Swiss National Bank is composed of 3 billion Apple, 2 billion in Google, and a variety of other stocks. So basically, the central banks is investing their surplus in the markets, which is incredible. But they're from Switzerland, you know, they like money, so that's fine. Composition of the balance sheet of Bank of Japan. If you look this date at 2011, and if you look dollar yen, you will clearly see that the move up in the dollar yen started when the Bank of Japan starts actually the full spree buying in 2011. So it's the basically same date if you look these two charts. Okay, so 2010, 2011, and off we go with the balance sheet. The Bank of Japan actually were starting buying assets in the form of ETF and stocks. And I don't know if you know, but the Bank of Japan almost now owns almost half of Japanese stocks and ETFs. So basically what they do with that is again, and actually put how actually this dollar yen reach our targets, which we are looking to begin in the next few months on the upside. Actually, the Bank of Japan can start buying even more ETFs and stocks and actually do the same expansion on the dollar yen as before. So that's how I look. Look the risk currencies. CAD yen, dollar yen. Actually, we are waiting a small pullback here, and I'm also prepared again on the short, at least for the measured move. On this dollar yen, there is a 5-way move down, and I'm looking for the ABC. If be something more exuberant, I'm just going to go further. CAD yen is the same, but on some other currencies which are tied, for example, with pound, because this crosses has several currents in them, they're not falling so much. A relatively small fall on the pound Japanese yen, because pound is going against the dollar. I don't think also pound has a much of a downside. So I see broad-based dollar selling in the next few months on charts, and we are at some critical points, and on possible Fed cuts. Okay. One more thing, guys, and then we're gonna pass it to cryptos. I also try to look for a possible this wave count on the S&P. I think that is just a supposition now, but we can also maybe contemplate that there is a possible that we are in some type of a large ending diagonal here, which might take us to levels around 4,200 to 4,600 in the next year or two. So this is also the possibility. This wave one should go here, so we will get actually a good relation between wave 3 and wave 4 and wave 2, and then this may be the first 3 waves up in a wave 1. We go 3 waves down in a wave 2, so we're gonna see a triangle. And if you see that this 200 weekly moving average just come around there, and then we can go up in a big ABC in a wave 3, 4, and 5. So we can be in a huge multi-year ending diagonal as well. I hope you would also agree.
People are going to lose their minds. People are going to lose their minds if that becomes our reality. That manifest reality.
Yeah.
Yeah. Okay. Yeah. So hit
I mean,
good
we are not
there. So take away dollar bearish. But before you move on, though, real quick, are we seeing this sort of deflationary commodity trend? Like, are we seeing that manifest in Aussie and Norway and Kiwi? I mean, don't spend too much time on that. But are we seeing? I understand you're dollar bearish, but I would suspect to see commodity-based currencies with proximity to Asia come under a lot of pressure. Is that what we're having, or no?
No, actually, Aussie dollar actually held quite well all of the selling in the S&P. This was already done before the S&P actually started selling. So if you look the overall wave count, Aussie dollar is falling from 2011,
I mean,
and this is the 4th wave. So
you hit Aussie dollar. Hit Aussie yen real quick. Do you mind? Where are we there?
Yeah, no, I don't mind. Okay, so Aussie yen is moving down much more heavily. So if we start to get exuberant move, as you know, I have been looking lower in Aussie yen, and if we start moving further lower, this is either a 1-2-1-2. So yeah, so I'm kind of thinking, and we will see. That's why I think this move down is not end of the world, like people are calling. I think we're gonna drop either to your daily 200 moving average, do some consolidation, and then in some time, in a month or two, go up, or we go a little bit further to my weekly 200 moving average, because all charts points to that. But in the meantime, I think Fed cuts, and we get a big push in currencies and in commodities midterm to short term on a 3 to 6 month horizon to adjust the dollar with the world. So that's my take.
Okay.
And I think we are going to play that with our members. Okay. Okay.
All right. I got it. Hey, real quick, show me dollar Norway, because with everything that's happening with crude oil, I used to probably the most money I've made trading FX has been in dollar Norway. And I think it's such a good
dollar Norway is.
It's such a good barometer
one more thing. Dollar Norway,
you know, for
dollar Norway didn't move much at all yesterday. This was already done before.
Okay.
We really moved at 20 pips on a such
Got it. Okay. All right. Let's just moderate. So can you quickly? Yeah, quickly head over to crypto now. Market's open. We're seeing a good
Sure.
bid here coming out. Looks like S&P's up 0.6, Nasdaq's up 0.8, Dow's up a half. I'm just looking at the sector scoreboard here this morning. Looks like we're being led by the Qs, up 0.94. Actually, financials. Wow, it's kind of a strong. We got financials, communication, tech, healthcare leading the charge here with the S&P right there. So kind of a strong leaderboard. Interesting on financials coming up there, 1%. So I know you've had some strong opinions on the crypto market as well, Alex. Just tell us what's happening.
Yeah, for now, we are still in this beginning move on the upside. As I warned our members, we are still not out of the woods because until we go over 500, I'm not going to stay bullish. I'm going to stay bullish and be aggressively bullish as long as we penetrate this channel on the upside. We did almost 2-hour analysis on our weekly webinar with clients, and we explained all of this in details. I'm expecting one more push up, actually in Ethereum. I think this is a 4th wave. So there is a 5 waves up in one, down into very beautiful wave 4 developing now. So I'm looking for a possible entry here for this push on the upside, and I think the first move will be completed. Then we're going to go down in a corrective, but overall we stay still bullish. On Bitcoin, the same. So we have been unable, as I stressed many times, but people cannot understand that this is functioning very well. I stressed really many times that 10,000 level will be possibly unbreachable for Bitcoin, and that happened because I'm telling you that this actual a previous wave X is going to be a huge resistance in this first instance. So as you can see, we have been trying once, twice, 3 times, and we are moving down. So I'm looking for a possible move down in a wave 2 or a wave 4 in Bitcoin for completion, and then I'm going to look to buy it when we actually do a wave 2 in Ethereum. And our Bitcoin's dominant chart is showing us that we are going to still have for some time outperformance of Ethereum and other alts over the Bitcoin. So I'm looking this bearishness for the moment, and I'm anticipating one more move up in Ethereum. I want to trade it here in this zone, so I'm looking and preparing for possible move on the upside. I want to be long with our members, and then possibly I'm going to trade this corrective pullback as well, because I think we will get to 50% back. So relatively in crypto market, we have been doing this for the last week or two, and we are in some type of consolidation, I think, in a blue wave 4, and I think soon go higher, at least for this push on the upside.
Very good. Appreciate the rundown there.
Yeah,
Bennett,
I love the connection.
Yeah, we've been struggling with the connection the whole time. Bennett, can I throw one more little name, one more fun little tidbit in, and then I'll let you wrap it up?
Absolutely. You need the screen?
People are asking about gold. Okay.
Go ahead.
No, I'm
just
asking about gold. No, I'm just saying we have been on a stance that gold is on a very critical juncture. If we go above 786, we are definitely might see gold going higher and much higher before the some because we were looking here, and as you can see the gold chart, we have already reached our objectives. So the bullish wave count actually says that we might just be in a pullback, and that we might even on gold higher, and it fits nicely with the dollar. So we will see. For now, this 786, and if we get the 3 pullback and we start pushing through this 786, I'm going to become very bullish on gold.
Nice.
Okay, sorry guys.
Yeah, no worries.
No, that's okay. No worries. No, it's been yeah, we talked about it at the beginning of the show, end of the show. Gold has been a pretty consistent bid, even more so than than bonds, which are coming off here a little bit. But one market that I don't know if you've been watching this, Bennett, is Baba. Have you guys been watching Alibaba at all?
Absolutely.
Let me just share number 3. I was surprised in yesterday's 1,000-point down move that Baba was only down about less than 0.2%, within a pretty interesting triangle structure here. So you'd expect to see, the largest Chinese e-commerce company come under pressure, but maybe people are just like same reasons that Zoom is acting so well. People are shopping at home. I don't know, but I know this is probably your account, Bennett, I believe. While we're above 200, Alibaba certainly looks supported for the other, for the push higher above 220, and then the story stock that seemed. Yeah, go ahead.
No, you're good. When you get a chance, overlay the S&P on Baba.
Okay. Yeah. Wow. I mean, that just shows you right there, as the S&P has broken the January 31st low, Alibaba has stayed above it. So obviously with a sell-off volatility pocket that's originated in China, to have such a large company like this perform so well, I think that's very telling. Is that where you're going, Bennett?
Yep, exactly.
Yeah.
Just the overall correlation.
And then the other one that, yeah. And then the other one that, CBC's just been all over a Zoom. I think earnings are coming out soon, but you have a stock that's just sort of consolidating above the highs around 110. It normally get worried when a stock is so much in the news flow, but if you just kind of look at where we are, just trying to break up through 111, I think we have a little bit of consolidation here. Zoom looks like it might have room to go. But sort of a nice comeback here. NASDAQ up 1.36%. I think the last 2 days the markets have come out of the open bid or in the pre-market bid within the first 2 hours of trading. That bid is gone. So we need to watch very carefully over the next 2 hours to see if that bid can maintain, because it certainly hasn't recently. And if that happens, then, oh boy, not good. So, Bennett, take it away.
Yep. What was that, Terry?
Make that a little bigger if you can.
You make an excellent point.
Zoom in on it. Yeah.
There we go. There we go.
Us old guys, we can't read.
I know, and all these crazy resolutions. And then we're also launching a YouTube channel. We've got another show in the works for the next couple of months. We're working on some ideas, so please check that out. And you can also visit us at TradingAnalysis.com. Stock, options, Forex, crypto. Hope to see you guys there. So, team, any closing thoughts? It looks like we're getting a nice little rally back. Maybe that B wave under development. What are your thoughts, Todd? You liking this opening bid?
Makes me nervous. I think you make a strong case that we just saw 5 waves down here from 3,400 SPX down to 3,120. Corrections are not 5 waves. I think your point is well received. So I'm going to be
looking forward to this 3-wave pullback to get some short exposure. So, anyways,
guys, but hey, let's just finish with this. That's the nature of a 3-wave correction, right? People are like, oh, I'm trying to buy the pullback. And you had, who was the prominent guy? Who was it yesterday was warning against buying this pullback? Who said it? This time is different. I forgot who it was. I'm drawing a blank. But he said, don't buy the pullback. And I think people are in that mentality to buy the pullback. You get a B wave rally as the team is expecting. B wave does 50, 2/3 retracement. You go back, you break below the A wave. Everyone who tried to be a pullback buyer with some discipline, all their hopes, dreams, and goals are crushed. They capitulate, they get out, they turn their back on the market on the C wave at a new low, and then that's where you need to step in. And that's just the heart of a simple 3-wave correction. And that's the psychology, and that's the sort of the behavioral finance aspect of what we're doing, and just trying to get inside the psyche of everyone, specifically because this has been a straight up move since October of 2019. there was only there was two corrections, like 2.6%, 3.6% since October 2019. Barely let anyone in. So there's going to be a lot of people trying to get in here. And again, if you go down, make a new low below 3120, people are going to stop out. That manifests itself in a C wave, and that's the opportunity I'm looking for to deploy longer term capital. So that's all I got.
All right, guys. Sounds good.
It was Mohammed El-Arian. Thank you, guys. Thank you.
Yeah, we got some pretty decent futures.
Sorry, go ahead.
In here. No, you're good. All right, guys. We'll leave it at that and be watching for. Let me go ahead and bring my Motive Wave window here just one last time for you guys. So watching this move back, just to give you guys an idea of the retracement levels. We've got the 38% at 32.20 and then the 618 up at 32.85. So we'll be watching these resistance levels. We also have the previous this fourth wave here right at around 32.53. So right around that 50% retracement. So looking forward to it, and we'll go ahead and leave it at that. Again, check us out, TradingAnalysis.com, and hope to see you guys next week. Team, thanks for joining us. Members, YouTube, everybody,